Today we'll be studying about the methods of valuation of goodwill. There are three methods which we use. These methods are the first one which we know of is called average profit method. Second one which we use is super profit method. Third one is capitalization method. Ultimately, what is goodwill? Goodwill is our power to earn more profits, more than what others in industry. So let's try to look at it from three different ways. First one is average profit. Average profit method states that let's try and find the average. Average, as you already know, how we calculate average age, say age of 10 people divide by 10. Here average profit is required. Take the profit of last certain number of years, divide it by number of years, you will get average profit. But it's not that normal. Certain things need to be taken care of. We need normal profits. Every year something abnormal, like when COVID years were there, those were exceptional years. So there'll be certain abnormal gains, abnormal losses, non-business income and non-business expense, and certain possible future expenses also, which will be there from now on, which were not there earlier. So we need to make adjustment in each year's profit for these things first of all. How do we do that? We take total profit. For total profit, each year's profit has to be adjusted for abnormal items. Certain abnormal items which are added are overvaluation of opening stock. Remember our trading account? Opening stock used to come here. If it is overvalued, profit is reduced. Gross profit is reduced. Net profit also gets reduced. Everything goes decreasing, which is wrong, which should not have taken place. So we will add it. Similarly, if there is undervaluation in trading, we used to show closing stock here. If it was undervalued, profit was shown less. So if we put it to the new value, it was 3000, we make it 4000, profit will should increase. We have shown lesser profit. So again, that has same role of adding it to increase and show the correct profit. Any non-recurring expense, any expense which was a one-time expense, COVID year, maybe sanitization expense, it was a one-time thing at that point of time, it will not happen again and again. Capital expenditure treated like revenue expenditure. You purchased a car and you treated that car amount as car expense. Car expense is revenue nature and this is capital nature. So if you treat capital as revenue nature, you must have shown it in your P&L account as expense. This would have reduced your profit. It should not. So we will add it back. Any abnormal loss by theft, fire, etc. needs to be added back. Now next is what are the items to be deducted. Any profit on sale of fixed asset. There we had undervaluation, here overvaluation of closing stock. Profit shown as more. Get back to the old value. Undervaluation of opening stock. That means profit is again shown more. To reduce it, minus. Any non-recurring income, once in a while income you had, you will not have it in future. So that needs to be adjusted from. Any income from non-trade investment. Trade is buying and selling related. Any future expense, any management expense. Like we did one example of car, the previous one. Car was treated like car expense, revenue nature. So when you did not take car, you must have forgotten depreciation. So now when you take depreciation, that needs to be deducted from the year of purchase till the number of years profit which are getting affected by the same. Once these adjustments are made, we get the total profit as per adjustments divided by number of years. If last 3 years profit is there, then divide by 3. And for calculating goodwill, goodwill is equal to average profit. This is what we have calculated after adjustment into number of years purchase. Let's understand this number of years purchase. Number of years purchase means for how many more years we are expecting the same profit to be earned by us. 3 years, 4 years, 1.5 year, 2 year. So this will be given to us in the question. Number of years purchase or how many more years we are expecting the same profits. That brings us to the end of first method. Now we come to super profit method. Here also we need average profit. Sometimes actual profit is given to us. You can take that. And then we find normal profit. What is normal profit means? What normally others in industries are getting. So take the capital employed, money invested by you, into normal rate of return. The normally what you are earning. Say you have invested 1 lakh. Normally others in the industry get 10%. So normal profit becomes 10,000. If your average is or actual profit is 15,000 rupees, normally others are earning 10. You have goodwill, you have reputation, you are better than others because you are making it as 15,000. So next step is super profit. Super profit is equal to actual or average, whichever profit is given, less normal profit. Here 15 minus 10, 5,000 is your super profit. Now super profit doesn't end our goodwill here, it's just the super profit. This is also multiplied with number of years purchase. How many more years we expect this? So if we expect it for another 2 years, 5,000 into 2, 10,000 is our goodwill. Here, from MCQ point of view, they might tell you goodwill is 10, find super profit at 2 years purchase. So, x into 2, let super profit be x. X into 2 is 10,000, super profit is 5. Post that they might give you actual or normal, one of the two, the other could be missing. Or rate of interest, normal rate of return might be missing. For that you will find the normal profit and find that. So the Grewal book at the end has a lot of MCQ based on it. This is important from all exams point of view, school also MCQs, and also from the point of view of your CUET. So please get used to this method. Next is capitalization method. Capitalization means capitalization of average profit. See, there are two ways of looking at profit. How much more profit than others you are getting, or compare in terms of capital. If others can manage, say if you have invested 5 lakh and you're getting a profit of 50,000, others have invested 6 lakh to get this profit of 50,000 rupees. So that means you have saved 1 lakh as capital. So your efficiency can be compared in terms of profit as we were doing earlier, or in terms of capital, the money saved by you. So capitalization method has two under it: capitalization of average profit or capitalization of super profit. So when we take capitalization of average profit, take the average profit, multiply it with 100, divide by normal rate of return. This is what others need to invest. Say that will come as 6 lakh what others need to invest. Less capital employed. This capital employed or net worth or net asset is what you have invested. Your asset minus liability is what? Say this will turn out to be 5 lakhs. So you have saved 1 lakh. That's your goodwill. You can manage that same efficiency or same profit with less capital. And when we have to do super profit, it's a little easier. Super profit, we have already taken the difference. So super profit into 100 by normal rate of return will give us goodwill by super profit method. So this is about the treatment of goodwill under three methods. The three methods are average profit, super profit, and capitalization method. Let's take one example of capitalization method. Under capitalization method, if your super profit is 50,000 Normal rate of return is 10%. Then what is your goodwill? 50,000 into 100 divided by 10. 5 lakh will be your goodwill in this case. Clear? If we have to capitalize average profit, let your average profit be 30,000 and your normal rate of return be 10%. So what you have done is 30,000 into 100 by 10. Others are investing 3 lakh rupees, but say your asset minus liability. Your assets are 5 lakh, liabilities are 3 lakh. So your net worth, your capital employed is 2 lakh. So 3 minus 2, 1 lakh. This is your capital employed. This is capitalization of average profit. This 1 lakh is your goodwill. Again from here, this information, this and maybe this is given, this can be calculated. You could be asked to find this. So that will be a part of MCQs. This calculation of goodwill has to be correct for following topics like change in ratio, admission, retirement. So everywhere that goodwill calculation might not be tested only as a 3 marker or 1 marker. It can be tested as a normal question of admission where goodwill is of the firm is valued at, and one of the methods could be asked by you to calculate. Thank you.